Hi guys, good afternoon and welcome to Money Control. I'm Karunya. With me is Manisha Gupta and all eyes today on the sell-off taking place in the metals universe. Firstly, what are the big triggers that are pulling it down?
Well, almost every asset class is getting sold into, and that is the reason you have metals partaking into that as well. The kind of sell-off that we've seen in equities, the US dollar index now breaching above 114, the weak economic data that we have seen coming from Europe, China and UK as well, where many of these currencies are hitting record lows, is the reason that you have seen a sell-off in metal. And then even as China has started to come back, the whole point being that China is on a holiday from 1st October to 7th October also tells you that the demand in that period also will decline. So there's a lot of uncertainty, weak business activity, construction numbers are not so strong, so the metal demand itself seems slightly weaker.
You know, given the way the markets are panning out, I think we also should go on a holiday and come back after a week or so when things stabilize. But on a serious note, which are the worst affected metals which have suffered the most?
I think we've seen a very sharp decline. Actually, when you look at from the highs of this year, which was in the month between March, April and May, from there, many of these metals have declined anywhere between 25 to 35%.
From their highs?
From their highs.
Earlier in the year?
Yes. From 2022 highs itself. So while we are into that bear territory and we have been there for some time, the metals are oversold with the kind of correction that we have seen. If you were to buy a metal, I think copper is a better bet because here the inventories are lower. If the demand comes back, whether it's about construction, cabling, energy transition, copper would be the first one to rebound here. In the Indian markets, we've seen some cushioning because of the depreciation in the currency. In the international markets in China and LME, the decline has been much stronger. But in case of other metals as well, aluminum for one example is trading at a 17-month lows. But that is because Europe has no availability. In China, aluminum is being produced at record highs. There is no demand there is the reason it is there. Zinc as well, the supplies are increasing, the demand is not there. In case of copper, you see all the fundamentals actually matching up. If there is a rebound, copper it is.
That's why it looks better placed than the others. But typically when the US dollar strengthens, is this what happens or are we looking at something unfamiliar or unseen?
So, there has been data available from 1970 and a lot of people seem to be reading and debating on that. Well, yes, every time you see rate hikes going up and the dollar going up with it, there is a knee-jerk reaction, but it doesn't sustain for such a long time.
Okay.
This time around, there's just too many things in the play. The weak economic data, the recession fears that are coming in, and the fact that the rate hikes will continue in this year and the first quarter of 2023 as well is something that really seems to be bothering and is the reason you have seen the kind of decline and the prices sustaining at lower levels.
What a year has it been, right?
Is,
for
yes.
all asset classes. Not just for commodities, for markets, for cryptocurrencies.
You could basically divide it into two or maybe four because the first quarter was great. The first half was all in the positive and then the second quarter.
The war happened, the recessionary fears trickled in and now the most recent one to take it on the chin is the currency space.
Yes.
Let's also talk about the precious metals because it's not just the core base metals but also gold and silver which are trading weak, and typically if let's say the recessionary fears are justified and if indeed there will be further inflation from these levels, then gold should look attractive. Why is that selling off?
So, I would say one thing on this, that Indians are the smartest of people around because people are buying gold. Usually, when you look at these months of August, September, one, it is monsoon, you are busy in sowing, and then these are not so auspicious days. But this time around, we do understand that people are buying gold because it is at lucrative, below 50,000 kind of levels. So, imports are expected to be good. The investment demand is looking stronger. But yes, price-wise is not so great. If you bought gold in the beginning of this year, you're not sitting on a profit right now. But, at some point in time, the US will realize that you can't have the most bullish currency in the whole world, and that is when you will see the dollar index come off a bit and you will see gold and silver gain up because there are concerns in the international market and you can't have such a strong US dollar as of now.
So it could turn out to be the dark horse. So if given a choice to invest in copper vis-a-vis silver or gold, would you still say silver, gold?
Because industrial demand will come back, so you should basically be dividing your money there. You shouldn't pick up favorites here. So copper it is, and within precious metals, silver if you're looking to make that quick rebound there, and gold just to be ensuring that you have your portfolio.
Safe haven assets, and as they say in equities, the same applies to commodities also. Don't put all your eggs in one basket. Diversify. Even if all these three names look attractive at the current levels, don't just rush towards just the one, and try and diversify there as well. With that, we're going to wrap it up for today's conversation on commodities. Thank you for tuning in.